Hi, good morning, everyone. It's a very happy morning because, as part of the research team, I'm so happy to see that our recommended fund list has been delivered consistent perform to all the investors. And just now mentioned by Su Cheng and also Wen Qi, last year, our recommended fund list has delivered an average return of 18%. So when I was thinking about what topics can bring even more excitement to all of you, I think AI race could be one of it. And talking about I believe every one of you knows about AI. We know ChatGPT, we know Gemini, we know Claude. But today, when we talk about investing in AI, most of people might say that investing in technology company means investing in AI. But many of them did not know that there are a lot of different players within this technology industry. And so therefore, in the next 25 minutes, I only want you all to know about three things. Just three things. First, what had happened in this AI race? When valuation is running high, is semiconductor still investable? And second, where to invest? And last but not least, what are the things we need to monitor closely? Now, just when everyone was talking about investing in technology means investing in AI, well, I wouldn't say it's wrong because throughout the past 3 years, since the ChatGPT introduced to the world, we have been seeing a long bull run in all the technology companies. But stepping into 2026, fast forward to today, are we seeing the same thing as well? Now look at the chart over here. Within technology industry, we have different players. We have semiconductor players. We have your Max 7 players, internet, software. There are so many players out there within these technology spaces. But throughout the past 6 months, look at the performance over here. Semiconductor has delivered over 170% of return, while the other counters, look at their performance, they are relatively muted. So we are seeing a narrowing leadership within the technology spaces. And let us look deeper into this semiconductor space. Now, here are those semiconductor companies under this semiconductor index. And you have top performing and bottom performing companies. Now, let us first look at the bottom performing companies. Now, I believe some of the company names all of us might be familiar with. Your Nvidia, your Qualcomm. Those companies are those giants that can consistently deliver earning surprises to all the investors. But look at today, market seems like not rewarding them. And if you look at the best performing companies, markets are now favoring those memory chips player like Micron. They like equipment companies like Lam Research, Applied Materials. And in fact, all of us should be happy. Because why? Our EPF actually invested in Micron. So right now, when valuation is running high and we see a diverging performance within the space, is semiconductor still investable? Now, I'm going to answer this question with a supply and demand perspective. Now, just look at these companies. We see them as chips suppliers. Now, you have supplier that supply chips. Where does the demand come from? Now, first layer, you have your demand coming from your AI companies. These companies, for example, ChatGPT from OpenAI, Anthropic, Claude, XAI, Grok, Google, Gemini. Every single question, every single prompt we ask them, even as simple as, what should I have for my lunch? All these require computing power to answer your question. And today we are not just asked one question, we ask follow-up questions. And when models getting more and more advanced, we even prompted more and more complex tasks to them. We ask them to generate PPT slides for us for presentation. We ask AI to generate your fruit AI videos for us. And all this requires more and more computing power. And apart from computing power, the rising usage of AI also reflected in the private companies' ARR. So what is ARR? It's basically telling you the average revenue, average recurring revenue. Now, in simple terms, you can see it as like a subscription fee, subscription revenue, a recurring revenue that the companies can expect throughout the years. So look at the chart over here. We have seen the orange color line that is representing Anthropic. Their ARR is growing at over 400% in just a few months of time. And so, with rising usage of AI, with the model getting more and more advanced, with more and more power computing needed, what's next? All these AI companies, they do not just build everything by themselves. Today, many of them actually rely on your hyperscaler. They rely on your hyperscaler, for example, Meta, Google, Amazon, Microsoft, or Oracle. They rely on their cloud infrastructure. Which is why throughout the years, with rising AI demand, we are seeing these hyperscaler been spending more and more and more to build out their AI infrastructure. For example, your data center and all these required chips. All these required chips. Now, on your right, this is a chart telling you what are the cloud revenue to capex ratio. Well, I know it's very complicated. It has a lot of numbers, a lot of bar chart over here. But if I were to tell you, what does that mean? It tells you that this hyperscaler, they are generating more revenue from what they spend. Which is why, with rising usage of AI, with AI infrastructure keep on building, computing demand, computing power getting more and more, is semiconductor still investable? My answer is yes. But just as what we have seen, we are seeing a narrowing leadership within the spaces. We are seeing a diverging performance within the space. And so therefore, we need to be selective on what we invest. We need to be selective on where to invest. So right now, where to invest? Now allow me to show you this very complicated semiconductor value chain. Now, we see a lot of different companies here. Don't worry, I wouldn't go through every of them one by one. But do allow me to slightly walk you all through. I just want all of you to focus on the left-hand side. The left-hand side, the designs layer. Now you have integrated device manufacturers, EDA, IP, fabless designer. Now that doesn't matter. But today, be it NVIDIA, be it your AMD or Micron, they will use EDA software and IP that is provided companies like Synopsys, Cadence, ARM, and now they design chips like CPU, chips like GPU, chips like memory, analog, and ASICs, and all this sits in design layer, the left-hand side part. And now after designing the chips, what's next? Now we go to the manufacturing layers, which is in the middle one. Now, no matter how good the chips you can produce, be it any of the peoples here, any of the companies here, you need manufacturing players to help you to manufacture the chips. And which is why we have bought this out. We think that these are the key things that we need to monitor. These are the key players we liked. Today, when we're going for manufacturing, you need equipment from Lam Research, from Applied Materials. You definitely need EUV machine from ASML. And you need your foundry players like TSMC to manufacture the chips for you. And so, we think that the constraint is in manufacturing place. And if you could look in deeper, actually many of these companies are coming from Asia. Many of them are coming from Asia. So which is why we hold a more positive view on Asia semiconductor. And we believe the physical constraint is in Asia. Now, within Asia, we think that the manufacturing constraint sits in Taiwan. Why? There's one company called TSMC. TSMC is a foundry company where they accounted for more than 70% of the pure foundry market share. Now, today, when we talk about AI, we use more advanced chip. We use advanced AI chips. And for TSMC, they accounted for more than 90% of the market share. So today, with the increasing demand for AI advanced chip, look at the chart that is represented by the blue color. It tells you that the capacity of TSMC to manufacture all those advanced leadership nodes is increasing, taken by all these AI chips. And therefore, that has translated into a higher utilization rate of their foundry. So even today, TSMC were to expand their capacity. But let me ask all of you, can foundry be built overnight? They need equipment as well. So this is why we are so positive on Taiwan. Now, second, when we talk about AI, a lot of people would say that CPU is the brain, GPU is the heavy worker to work on the computing. Now, with AI getting more and more advanced, you need memory chips to feed the data faster and faster for you. And so therefore, we need more and more advanced memory chips. Now, looking at the chart over here, there are 4 charts that is from JP Morgan. Now, every blue color lines, blue color bar chart, that represent demand for memory chips, be it NAND, be it DRAM. Now, on the other hand, the gray color one, that represents supply. I believe everyone here definitely knows, when demand more than supply, what does that mean? It means undersupply. The demand is too high until I cannot supply you enough chips. And this is why memory chips prices has been surging over the past few months. And based on the forecast, it is expected to continue to be undersupplied up until 2028. Now, is there any Apple users here? Well, I am. And 2 months ago, when I was searching for a more affordable MacBook, I look at MacBook Neo, which is also our prices for today. Now, 2 months ago, MacBook Neo prices was like 2,500 ringgit. Today, because of the memory chips prices, even Apple, this kind of huge scale of electronic consumer company, they raise prices. So today, when you look at the MacBook Neo prices, it costs you like 3,000 ringgit. Any gamers here, your Nintendo Switch, your Microsoft Xbox, all these prices has also increased. And don't forget that the undersupply will remain through 2028. And this increase in memory chip prices also reflected in the hyperscaler spending. Just now talk about the hyperscaler spending has been increasing. Now more and more share of the spending actually now flows to the memory chips player. So which is why on your right hand side, we see some of the South Korean memory chips players like Samsung Electronics, your SK Hynix, their earnings expectation in this year, just 2026. Market expect them to grow at like 400%. That one is in June. Back then in June, market expects Samsung Electronics, their earnings this year to have like 400% growth as compared to last year. Back then, people are saying that this is near the peak. But fast forward to today, 2 months later, in July, we are seeing analysts upwardly adjust the earnings expectation, and now they are expecting this company to earn more than 600% than last year. And so, SK Hynix, 560%. And all this has contributed to the memory chips share prices rally. And not just long ago, 2 of these 3 companies, they released their results. Those are Samsung Electronics and also SK Hynix. And their performance is super, super good. Look at Micron. Their first quarter earning result, see over 1,300% growth as compared to last year. Samsung Electronics, 500%. And most importantly, we see 16 companies, they are actually signing long-term contract with Micron. That means that there are more companies trying to lock in the memory chip supply, even though we are seeing the memory chips prices going up. However, if you can look at the charts, over the past 1 month, we are seeing the memory chips prices, all those share prices started to come down. So this is also the reason why we want to let every investor know that while we remain positive on South Korean memory chips player, while we think that AI demand could structurally benefit memory chips, investors should know that we are investing in a cyclical nature of semiconductor, and volatility is definitely there. And in fact, if you just look at yesterday night, SK Hynix, they listed their companies in Nasdaq, and we see a 13% gain. And so therefore, investors should own memory chips, but we do not encourage you to invest through leverage product. We do not encourage to own it through leverage ETF. Now, if you can remember, just now I talked about hyperscaler spending. The one is in US. We see similar things that happens in Chinese internet companies like Alibaba, Tencent, Baidu, and ByteDance. All these companies in China also spending more and more on AI infrastructure. Now, why? Because the usage, the demand for AI Chinese model is also increasing. Now, look at the chart over here. If you just look at the leaderboard on your right, who are the top 4 leaders? They are your DeepSeek, your Mimo from Xiaomi, your Minimax, and also your Tencent model. And all these are from China. They are Chinese AI model. And so just now we verify whether demand is there with true usage and with true spending. And we see the similar thing in China as well. But where does the money goes to? Over the past decade, we have been seeing US and China, they have been fighting each other. You have seen price war, right? So therefore, US has been restricting all those advanced equipment, including chips, to export to China. So with the export control keep on expanding, we are seeing the equipment spending within China higher and higher. And why higher and higher? With this kind of situation, while in the US just now we see the semiconductor value chain, we see the fabless players are in US, right? We see the manufacturing in Taiwan, right? We see equipment not only in US but also Europe. But today in China, you can find the similar semiconductor ecosystem. From your fabless design to your manufacturing to your equipment, all are in China. And beyond domestically, if you look at globally, China also accounted 65% of the global optimal module market share. And there are lots more Chinese leaders within the AI space. And so therefore, with a more supportive government policy to support for their technology self-sufficient, we see demand, we see spending. And also this is why we think that China is the market that we shouldn't overlook. Now, what to be aware of? What should we be monitoring? What are the things we need to monitor? Just now we verified AI demand through usage and spending, right? So at FSMOne, we think that the slowdown in hyperscaler spending, the slowdown in CapEx spending could be a risk for the semiconductor AI race. So over the past few years, because of the rising demand from all these AI, we have seen hyperscaler, they keep on doing financing. And recently, they do it financing through equity, through debt. So therefore, we think that the increasing likelihood of interest rate high could be a risk. Now just imagine, if all of us here, we go to bank and we take a lot of loan, what if the bank increase the rate, increase the interest rate? They will give you more and more pressure, right? So that same goes to your hyperscaler. But looking at the chart over here, if you do a health check on their debt profile, actually all of them still relatively okay, except for Oracle. So this is the thing that investors need to be monitored. And second, shifting in AI demand could also potentially slow down the spending. Why? Because from time to time, when more and more advanced AI models coming out, people will started to think, Do I need the most advanced AI model, the most expensive AI model to just answer some simple question or just automate an email sending? Do we need to? So therefore, when people started to realize, when companies started to realize, actually they do not need so expensive, so advanced kind of AI model to execute their task. The AI usage may started to switch to more cheaper model, but at the same time also advanced enough to answer all their questions, all their needs. And so therefore, this is also one of the factors that we think it could impact the hyperscaler spending. And last but not least, we have been talking about if you need computing, you need AI infrastructure built out, which is why hyperscaler has been spending, right? What do they build? They build data center. They buy chips to build data center, right? And so today, when you need more and more AI demand, you need more and more computing power, you want to build more and more data center. However, can data center be built overnight? You cannot. So with land restriction, all the resources restriction, you have also power resources restriction. Data center could also be one of the factors that slow down your hyperscaler spending. And now remember, in the beginning of my presentation, I said I want you all to just remember three things. Just three things. First, semiconductor valuation is running high. Is it still a buy? Now, to recall, our answer is yes. But we are seeing leadership is narrowing right now. So investors need to be selective. Selective on where to invest. And in terms of where to invest, we believe Asia is a place that you should invest because this is where semiconductor bottleneck sits. And as I conclude my presentation today, higher valuations and also cyclical nature of semiconductor industry, they can be volatile. But volatility is not just about risk. Volatility can also bring you opportunities, so long you stay disciplined. So that's all for today. Thank you.